Good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita and with me is my co-anchor Ankita Saxena. Ankita and me were just speaking about that it's a big day. We saw the Federal Reserve hike rates, the RBI will really be in focus today as to how the MPC plays out. That and much more on the show today. But let me quickly take it to Ankita for the rundown on how global markets are really looking like on this Wednesday morning.
Well, good morning to you, Harsh, and good morning to everyone. Now, Harsh, as you mentioned, it's an important day. Yesterday, Jerome Powell also came out with the meeting, and the markets have responded pretty well to that. Now, yesterday, Federal Reserve Chairman Jerome Powell said that inflation is beginning to ease, though he expects it to be a long process, and cautioned that the interest rates could rise more than the markets anticipate if the economic data doesn't cooperate. Now, he said that the disinflationary process, which is the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of the economy. Now, he also added that it has a long way to go, and these are the very early stages. So, US stocks advanced following Fed's comments indicating that inflation is easing now. The Dow Jones Industrial Average added 265 points, the S&P 500 added 1.2%, and the Nasdaq Composite climbed 1.9%, up almost 2% in trade. Now, let's look at the European markets. European markets closed mixed. The Pan-European Stock 600 was choppy through the session and provisionally closed up 0.1%. FTSE was up fractionally higher, DAX was down 25 points, and CSE was absolutely flat but ended the day in the red. So that was a roundup of the US and the European markets. Post the comments, how's the crude looking like, Harsh?
Well, Ankita, crude has in fact surged versus yesterday's rates. We're looking at nearly $84 on the barrel on Brent, and we're looking at around $77 on the barrel on WTI crude. So you've seen a bit of a surge. Couple of reasons. One is, of course, the bearish commentary coming in, or rather, if I cannot call it bearish, I can call it neutral commentary coming in from Federal Reserve's chairman, and that will, of course, aid demand going forward as well. He's talked about goods, the deflation in goods, deflation of prices in goods, and that will, of course, add to the fact that oil's demand will go up going forward. The other piece that will add to the demand is the China reopening, which continues to be positive. And in fact, when we're looking at Saudi, who's the world's top oil exporter, they've raised prices for their flagship crude products for Asian buyers for the first time in 6 months. So across the board, we're seeing positivity on crude, and therefore crude prices are higher in early trade today.
So crude price is higher in the trade today. Let's quickly go across and see what are the events that you need to watch out for in today's trading session. Now, we have a couple of earnings coming in. We have Motherson Sumi, we have Shree Cement, we have Escorts, we have Minda, we have Trent, Adani Wilmar, Cummins India, we have Adani Power, and we have Piramal Pharma and Piramal Enterprises that will be coming out with their Q3 earnings. We also have a couple of corporate action. We have Godrej, that will be Godrej Agrowell, which will be holding a board meeting to consider fundraising by issuance of debt or debentures. We also have Motherson Sumi, and we have Piramal board, which will be meeting for a proposal to raise funds. So these are the events that are likely to take place as of today. Over to you, Harsh. What's happening in the global news arena?
Well, yes, thanks so much for that, Ankita. We'll switch over to Turkey. Turkish President Erdogan declared a 3-month state of emergency in 10 of the country's provinces. Turkey and neighboring Syria are reeling from 2 consecutive earthquakes, the region strongest in nearly a century. The death toll from the quakes is above 5,100, with many still missing and critically injured. Rescue efforts are continuing. Turkey's government has deployed nearly 25,000 search and rescue personnel, and countries around the world have pledged aid. Let me quickly take it to scenes straight from Turkey.
The aids are more coming. They are on the road, but the roads are blocked So that is the main problem. They are trying to open the roads, they are filling the broken roads, but it's still because of the weather conditions. Snow keeps snowing in the nights, and there is a black ice condition. Accidents are happening on the roads. 1939, since 1939, it is the biggest earthquake ever Turkey faced.
And here's an explainer on what led to an earthquake of this magnitude in Turkey. Let's take a look.
All right, now let me try and explain why the quake, the kind of quakes that we've seen in Turkey and Syria, have been so deadly and what really it could mean for the region going ahead. Now, the magnitude of this earthquake we're looking at, 7.8 on the Richter scale, the earthquake that struck Turkey and Syria, and this happened on Monday. It's likely to become one of the deadliest earthquakes that we've seen in this decade. And to make matters worse, the earthquake occurred in the night, which did not give people enough time to take cover, if at all that was possible, considering how sudden earthquakes can be. So where exactly did the earthquake originate? Let's bring up the map and tell you where the epicenter of the earthquake was. That's what you're seeing right now. The earthquake epicenter was about 26 kilometers east of the Turkish city of Nurdagi, and it happened at a depth of 18 kilometers on the East Anatolian fault. That's where the epicenter was. The quake radiated towards the northeast, and it brought devastation to central Turkey as well as parts of Syria. To put the magnitude of that earthquake into perspective, only 3 earthquakes have registered above 6 on the Richter scale since the year 1970. As far back as 1970, we haven't seen something as devastating as this. And the one that was recorded on Monday released more than 250 times the energy. The earthquake was much more powerful than other earthquakes because the fault line ruptured at a very shallow depth. More than 100 aftershocks have been felt as a result of the fault, and experts are predicting that the seismic activity may be spreading into neighboring faults as well.
Well, it's always good to have perspective from these explainers, but let's quickly move on. The top story outside of the RBI MPC was Jerome Powell speaking, and inflation is beginning to ease, the Fed chair said at a conference. He expects it to be a long process and has cautioned that interest rates could rise more than markets anticipate if the economic data does not cooperate. The disinflationary process, the process of getting down inflation, has begun, and it's begun in the goods sector, which is about a quarter of the economy, the central bank chief said during the event. Asked whether it would have influenced the Fed's rate call if the jobs data come in before the policy meeting, Powell said, "We don't get to play it that way, unfortunately."
And Minneapolis Federal Reserve President Neil Kashkari said that the strong jobs growth in January is evidence that the central bank has more work to do when it comes to taming inflation. Now, Kashkari indicated that the Fed funds rate needs to rise to 5.4%.
Let's take it straight to earnings. British oil major BP has reported a record profit of $27.7 billion for 2022, more than double that of last year. A clear indication of impact from the Russia-Ukraine war. The energy giant posted an underlying replacement cost profit, which was used as a proxy for the net profit. And it also announced a further $2.75 billion share buyback, which it expects to complete before its next quarter results in May. Shares of BP rose over 4% during early morning trade in London.
And Microsoft plans to release software to help large companies create their own chatbots similar to ChatGPT later this year. Microsoft also announced a new launch event with OpenAI after Google announced its own ChatGPT-like service called Bard. Microsoft is also working on incorporating ChatGPT into some of its other services like Office 365, Teams, and Outlook.
Sticking with companies, Zoom is cutting about 1,300 jobs as demand for the company's video conferencing services slows with the waning of the pandemic. The Chief Executive Officer, Eric Yuan, said he would take a pay cut of 98% for the coming fiscal and forego his bonus. Zoom will incur about $50 million to $68 million in charges related to layoffs.
And eBay announced plans to cut 500 jobs or about 4% of its workforce. In a memo to employees, the company's CEO said they decided to make cuts after examining the global macroeconomic environment over the past several months.
And SoftBank's flagship investment arm, the Vision Fund, posted its fourth straight quarterly loss as a slump in tech valuations continue to hit the Japanese giant. SoftBank Group overall reported a net loss of 783 billion yen, sinking back to a quarterly loss after posting a profit in the July to September quarter.
And Bed Bath & Beyond Inc. said it raised about $225 million in an equity offering and may get another $800 million over the next 10 months as the struggling retailer tries to avoid bankruptcy. Hudson Bay Capital Management is the lead investor in this share sale. Bed Bath first raised the prospect of bankruptcy early last month. Quickly move on to news coming in on the domestic front. If you took out a home loan of 50 lakhs for 20 years before May last year, your EMI would have been 38,000 a month. Now it stands at almost 45,000 a month after rate hikes of 225 bips in the year 2022. Now, most economists now agree that the RBI will once again hike interest rates by 25 bips at least. Now, the reason is that the volatile food inflation has come down, but core inflation remains somewhat sticky. And should the RBI go ahead with the interest rate hike, your EMI is set to rise again. Now, here's a lowdown on RBI's expected move. Let's take a look.
Well, yes, we're looking at largely a 25 basis point rate hike, and most economists are expecting a possible change in stance as well. We're looking at a change from withdrawal of accommodation to neutral. Now, key expectations is that, of course, the repo will move to 6.5%. And when we're looking at how global central banks are largely tracking global inflation, they are actually trying to catch up, which means that they are increasing their rates. So in order to defend the rupee, the RBI will also, to a certain extent, require to hike its rates up. And that's probably why, despite inflation coming within the tolerance band of the RBI will hike rates. We'll also look at commentary around growth, currency, as well as global recession risks. Keep in mind that will impact growth as well. Global recession will mean exports will fall, and some commentary around that will of course help and has been helping all this time as well. We're looking at CPI inflation. We did speak about that, fell below the 6% mark, came at 5.7% for the month of December. In April of last year, it was at 7.8%. So the RBI seems to be doing a good job of this. Looking at views with regard to inflation, it's within the upper tolerance band now. So that's a key positive. With regard to the last meeting, crude was at $82 a barrel, currently at around $77 a barrel. We're looking at 1 USD to INR at just below 83. That's where it largely was last time as well. Bond yields have gone up by around 0.1%, and CPI inflation has come down sharply from 6.8% to 5.7%. So keep in mind there are quite a few positives that have come through since then, and of course the focus may shift on growth. So that's largely what to expect from the RBI meeting this time around. And well, as the MPC meeting is set to be held today, all eyes are on the RBI, which they will bring on new interest rates. And to know more on that, ET Now spoke with experts, of course. So listen in to Shweta Rajani, who is the head mutual funds Anand Rathi Wealth, and Garima Kapoor, who is the chief economist of Elara Capital.
But if I was a central bank and if I was an MPC committee and I was looking at and taking cues from what's really come out in the budget, I'd be extremely happy with two things. One is that the focus of the mandate of this fiscal consolidation has not been compromised, despite it being a pre-election full-year budget. Second is that the pattern of spending or the quality of spending has incrementally moved more and steadily towards capex, which is even more encouraging. And third is that there has been an element to cut back subsidies. So if I was a central bank looking at the fact that are there any cues or any drivers that could be further inflationary from the budgetary spending point of view, I think I'll be fairly happy. And I think that conservative approach of the finance minister will actually bode very well for RBI and NPC when it comes out for decision making. I think it should have been one of the key drivers of why they probably will take a relief from the budget.
We have seen in the last few months is that banks clearly from 2019 have been following the floating rate pattern, which is repo rate plus kind of a model for setting the home loan rates. And in the last few months, 200 bips out of the 225 bips have already been passed on to the home loan buyers. What we have seen in terms of its effect for a long tenor loan, the EMIs have gone up by 20%. For a slightly shorter tenor of home loan, the EMIs have gone up by 10%. Now, this is the impact for an existing investor or existing home loan buyer. For people looking to buy a home loan, there was this report which came in from Knight Frank, which showed that after the December rate hike, the affordability index had already been impacted by 3%. Moreover, when we are looking at the unsold inventory in the key cities, that stands at 40 months, and that's been inching up month on month in the last few months. So all this is clearly reflecting that there has been a significant impact on the home loan buyers, whether existing as well as new investors deciding whether they should go in for their home loans or no.
And well, those were the experts on the RBI policy that's coming out today. Now, will today's outcome see the last repo rate hike by the RBI? Chetna Ahya of Morgan Stanley believes the RBI may take a long pause after today's rate hike, but says that they don't expect a clear indication of the rate trends ahead. Let's take a look at what she had to say.
Well, we think that the RBI may not really give a clear indication of whether they are pausing to do additional rate hikes. But in our forecast, we think that this will be the last rate hike in the cycle. And we think that there will be a long pause after that before they take up any kind of decision to cut the policy rates. But in the meeting, we don't think that there will be a clear indication of them having actually paused. Because there are some additional factors that could play into the picture going forward, i.e. what happens to oil prices, at the same time, what happens to Fed's policy decisions. And you saw that on the last week, Friday, jobs data point has raised markets' expectations for Fed policy rate hikes. And if that kind of development continues in the US, it will mean pressure on the rupee, and RBI will therefore have to be conscious of that additional inflationary pressures out of depreciation of the rupee. So we think that they will pause, but they will sound tentative on not having taken a clear decision to pause in the meeting.
Welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through what Asian markets are up to. We saw US markets in the green, so definitely a positive. After that Federal Reserve commentary, the chairman of the Federal Reserve giving his thoughts on where he sees inflation at the moment. But we're looking at the Shanghai, which is absolutely flat in trade as we speak, but still lower, negative bias coming through. We're looking at the Kospi, which is up over 1% in early trade. We're looking at the Hang Seng also, which is up around 0.1%, and we're looking at largely flat is where we're looking at the Asian markets. We're looking at the Hang Seng also, which is slightly lower in trade. But we'll quickly move on. We have Joe Biden who's speaking live. Let's quickly take it straight to that.
After we've created, with the help of many people in this room, 12 million new jobs, more jobs created in 2 years than any president's created in 4 years, because of you all, because of the American people. 2 years ago, and 2 years ago, COVID had shut down, our businesses were closed, our schools were robbed of so much, and today, COVID no longer controls our lives. And 2 years ago, democracy faced its greatest threats in the Civil War, and today, though bruised, our democracy remains unbowed and unbroken. As we gather here tonight, we're writing the next chapter in the great American story, a story of progress and resilience. When world leaders ask me to define America, and they do, believe it or not, I say I can define it in one word, and I mean this: possibilities. We don't think anything is beyond our capacity. Everything is a possibility. You know, we're often told that Democrats and Republicans can't work together. But over the past 2 years, we've proved the cynics and naysayers wrong. Yes, we disagreed plenty. And yes, there were times when Democrats went alone. But time and again, Democrats and Republicans came together to defend a stronger and safer Europe. It came together to pass once-in-a-generation infrastructure law, building bridges connecting our nation and our people. We came together to pass the most significant law ever, helping victims exposed to toxic burn pits. And in fact, it was important. And in fact, I signed over 300 bipartisan pieces of legislation since becoming president, from reauthorizing the Violence Against Women Act, the Electoral Count Reform Act, the Respect for Marriage Act that protects the right to marry the person you love, and to my Republican.
And well, that was Joe Biden on the State of the Union address. Now we'll quickly go across to Ashesha, who's with us in the studio, with all the stocks that you need to watch out for in today's trading session. Ashesha, take us through the stocks that we need to keep an eye out on.
Hi, good morning. So first up, we will have Astral and Focus. They reported the numbers yesterday post-market hours. Revenue saw an uptick of about 15% on a year-on-year basis, while margins have contracted by about 350 basis points. Company reported margins of 14.4% this quarter versus margins of 17.9% in the previous quarter, indicating a decline of nearly 350 basis points on a year-on-year basis. Net profit, meanwhile, has contracted by about 26% on a YOY basis. Apart from this, Board of Directors of Astral have also approved bonus issue in the ratio of 1:3, which means one bonus share will be issued for every 3 shares held, and the record date for the same is the 14th of March. Apart from this, BSE also on the back of its numbers will be in focus. Revenues have grown by about 6% on a year-on-year basis, while net profit for the quarter gone by stood at 48 crores versus 59 crores profit that the company had reported same time last year, indicating a decline of nearly 19% on a year-on-year basis. Apart from this, Board of Directors of BSE have also approved divestment of nearly 2.5% equity shares in CDSL through OFS route. Keep an eye out on insurance players as well. Insurance APE growth for the month of January is out, and HDFC Life's APE grew at about 17.3% on a year-on-year basis. Meanwhile, we have ICICI Prudential, which saw growth of about 1.4% on a YOY basis, and Max Life at 8.6%. Apart from this, Naveen Fluorine will also be in focus, this one also on the back of its numbers, where revenues for the quarter gone by stood at 564 crores, an uptick of a whopping 50% on a year-on-year basis. Bottom line has also grown a whole lot this quarter. Margins for the quarter gone by stood at 27.6% versus 26% that the company had reported same time last year, indicating an expansion of nearly 160 basis points on a year-on-year basis. And net profit, meanwhile, has grown by about 55% on a year-on-year basis. So keep an eye out on all these stocks.
Well, thanks so much, Ashesha, for a lowdown on all of those stocks to keep on your radar in trade today. Let me quickly take it to Bharti Airtel, which is in focus since its net profit declined by 26% sequentially. Revenue and EBITDA came largely in line with estimates. Revenue is marginally higher by just 4% quarter on quarter. ARPU has come in at 193 rupees, and the management says that the 5G rollout is on track to cover all towns, key rural areas by March of 2024. Let me bring in my colleague Anisha, who's going to get us more details on this one.
Well, it was a decent number coming in from Airtel this time around, especially on the top line. It was largely in line with expectation. The number came in at 35,800 odd crores, and we were working with 35,700 thereabouts. So in line with expectation. The margins also continue to be steady. 51.5% is what the company reported this quarter, and that compares with 51% that we had seen in the last quarter sequentially. Profitability optically is looking lower by around 26%, and the number stands sub 1600, but there seems to be an exceptional which is coming in of around 670 crores, and this is the provision that the company has made on account of the license fee related to earlier periods in the group's wholly owned subsidiaries, and that's the reason we are seeing that decline of 26% at the bottom line level. Having said that, when it comes to the average revenue per user, that was at 193. The street was expecting a number of 194. So a bit of a miss, but largely, mixed set coming in for Bharti Airtel. The commentary also is quite positive because they say that the 5G rollout continues to be on track, and they expect to cover all towns and key rural areas by March 2024. The average data customer stands at 20.3 GB per month, and the capex also continues to be on track because they spent almost 9,000 crore rupees, and bulk of it is coming in India as well, with almost 8,000 crore rupees worth of capex happening. So overall, a decent set coming in from Bharti Airtel, but we'll have to look in for more details coming in from the commentary.
And well, those were the quarter numbers for Bharti Airtel. Now, moving on, Henry Hub, the benchmark US gas price, is at 25-month low. This is on the back of rising output and forecasts for warmer winters. Now, how will a warmer winter in the US benefit GAIL? My colleague Somit is here to give you an explainer on that. Take it over, Somit.
Well, if you see the Henry Hub, which is the benchmark prices of gas in the US market, is at a 25-month low. So far, year-to-date basis, if you see, it has dropped nearly 43%, which is the worst start to the year that we have seen when it comes to gas prices since 2001. This drop in gas prices is largely on the back of warmer than expected weather, which would lead to weaker demand of gas in the US market and in the European market, and also because of rising production in the country. Now, how will this benefit GAIL? Now, if you see, nearly 50% of the imported LNG for GAIL are coming from the US market, and the prices of same are linked to Henry Hub, which means that if there's a drop in Henry Hub prices and if the prices remain low for a long term, then the gas sourcing cost for GAIL also comes down. Now, according to our calculation, given the current prices of around $2.5 per MMBTU, the gas sourcing cost for GAIL has come down by around 35% as compared to the gas sourcing cost that we had seen in the third quarter of FY23. And so far, if you see, the average gas prices in the fourth quarter of FY23 have remained lower at around $3.2 as compared to $6.1 per MMBTU, which means that the total gas sourcing cost for GAIL has dropped by around 28%. Now, in the third quarter of FY23, the gas sourcing cost for GAIL stood at close to $11.8 per MMBTU, and so far in the fourth quarter, it has stood at close to $8.4. And if prices remain low at around $2.5 per MMBTU, the gas sourcing cost would further come down for GAIL to around $7.6 per MMBTU according to our calculations.
Thanks so much for that, Somit. The other piece that made news is two-wheeler maker Hero MotoCorp posted a net profit of 711 crore in Q3. This is largely in line with ET Now estimates. Margins have come in at 11.5%, which seem to be a slight miss. Let me bring in Sharad Dubey, my colleague, who's here to break down the numbers for us.
Well, yes, in focus we are having Hero MotoCorp, and overall if you see the numbers have been largely in line, and you can say kind of a beat in estimates, especially in the revenue front and the PAT front. And PAT of course is having a higher other income component as well. Now as for margins, it has been slight miss, but the EBITDA numbers are coming in line. Now the important thing is that the sales that has fallen in double digits, and this was in line with the expectations because the festive season's demand actually couldn't sustain going ahead, and the full rural recovery has also not happened as the analysts are stating. Apart from this, an important announcement came in with a dividend declaration of almost 65 rupees per share. Now that translates into a dividend yield of 3% as per the current market prices. Now looking ahead, of course the average realization did grow 2% sequentially on price hikes basis, but it was still lower as compared to what the peers Bajaj Auto and TVS Motors had announced. Apart from this, sequentially the margins was a slight improvement, and this is coming in because of fall in the raw material cost prices. Now today itself the con call will be held at 12:30, and the important things which we'll be watching out for would be of course the rural outlook, the exports, the premiumization segment, and lastly the EV segment and what their launches will be there going ahead.
And with that, it's time to wrap up this show. You don't go anywhere. There's lots more action lined up for you on the market. Thank you so much for tuning in.